Good morning, guys. This is John Bennett with Reliastar Capital Management, president and founder. Just wanted to reach out to you today about some of the current market volatility that we've been experiencing. I'm sure everybody's been paying close attention to what's been going on. I'd like to maybe provide just a little bit of perspective. I certainly don't have a crystal ball. I can't tell you exactly what's going to go on, but I just want to maybe chat with you a bit about what we need to think about or how we think about the markets as they are today. One thing to keep in mind is the markets do not like uncertainty. And we can go back, certainly back several years in time. But if we just go back as recent as 2016 during that election time, we had a lot of turbulence in the market then. If you fast forward to COVID-19, we certainly had a large degree of uncertainty with what was going to happen with COVID-19 and how that was all going to shake out. We had people, losing jobs, not being able to go back to work. You just had a lot of turmoil around that, and of course, a lot of again market uncertainty. Later we had, of course, Ukraine and or Russia invading Ukraine. That was a difficult time. We had a lot of money that's been spent and pumped into the our economy. That's also caused some inflation. We've had interest rates that have risen and now certainly on the way back down. But all of these periods of time created uncertainty in the market, and that's one of the things that the markets they do not like. They do not like uncertainty. But another really good thing about the U.S. economy and the market is that it's very resilient, and we know that once we get some stable footing, it has the markets have the ability to adapt pretty easily. And then once it feels like there's some stability in place, things begin to even out and go back up. And we know out of all of the periods of time that was just mentioned, as well as periods of time even prior to that were much larger and much worse, we're just a few months removed from the market hitting an all-time high. And so the most important thing that we try to remember is we don't want to have knee-jerk reactions to these things. If there's anyone out there that believes that the markets are not going to come back, that would be certainly a conversation that I'd like to have with you individually. But I think we do believe and understand that there are always going to be blips on the radar. There's going to be things that happen that concern us, and nobody likes the pain of watching the stock market drop. But we do believe there's going to be some sound footing that's going to occur sometime, I would say relatively soon. That's again my opinion. I don't have a crystal ball. But I think then the markets will begin to respond well as soon as some good news on tariffs or there starts to be some agreements or deals made, which I would assume would probably happen in the near future. So again, we don't want to react to those things. We kind of want to fall back on the understanding that we have a diversified portfolio. So you guys, everybody that we've worked with and built plans with, we've built them to weather, storms like these. It doesn't mean that your accounts aren't going to drop, but we don't have all our eggs in one basket. We're diversified. We have some things in growth. We have a lot of dividend paying investments and other securities. And then many of you also have index annuities, which don't suffer an impact from these type downturns at all. And so, again, we've built the portfolios to weather these storms, and we want to keep that in mind. And so, with that being said, there's probably some opportunities to consider here. Anyone that's thinking about the possibility of a Roth conversion, I think that's probably a good idea if you wanted to look at that further, because stocks are down, and then now being able to ACAT or transfer a lower value over into a Roth IRA would not create as large a taxable event. It doesn't mean you sell the share, you just move it over into a Roth. So that's some potential there, and I've discussed that with a few of you already. There's also indexed annuities that do provide a degree of safety, and so or a large degree of safety. And many of you have those, but it could be a time to consider that. It's a good environment for those now. And then once the markets begin to take back off, you get the run up of that growth without the risk of that downside loss. So with all those being said, we feel optimistic about the future and where we're headed. It's just a little bit of a bumpy ride at the moment. Just wanted to reach out to you guys and let you know that's kind of our perspective on things. We don't want to make any adjustments or changes at this point. And if there's any of you individually that would like to, chat with me, just feel free to reach out, send us an email, give us a call. Otherwise, we'll just continue to steady the course. And as events change and unfold, we'll be sure and give you an update. But I just wanted to reach out and let you know those things. And I appreciate the opportunity to serve you guys and appreciate the trust that you put in us. And we look forward to seeing you guys in your upcoming reviews.